80% of the market is algo driven. If you're still manually clicking buy and sell, you're playing a game that's already rigged against you. Most traders lose money because of emotions, fear, greed, hesitation. But what if you could remove all that and trade like a machine? No stress, no second guessing, just pure execution. Today I'm going to break down exactly what algorithmic trading is, how it works, how you can start using it, even if you don't know how to code. By the end of this video, you'll know exactly what platforms to use, how to automate your trades, and the biggest mistakes to avoid. So first things first, what is algo trading? Algo trading is something that's trading with rules-based automation. This is where the computer executes trades for you. And this is used by hedge funds, banks, and high-frequency trading firms like Citadel, Renaissance, Two Sigma. Retail traders can now access this technology, but most don't know how. Here's an example. You ever heard of Robinhood selling your trades to high-frequency firms? That's algo trading in action. These firms analyze the order flow that retail traders put on Robinhood, and the high frequency firm scalps pennies on every single trade. So let's say you want to automate a simple strategy. You want to buy when the 14-day moving average crosses over the 28-day moving average. So the first step is picking a strategy. In this case, we're going to use this moving average strategy that I just explained. We're going to buy when the 14 SMA crosses over the 28, and then we're going to sell when the 28 crosses under the 14. So I went ahead and did that right here in TradingView, which is one of the platforms you could use, but you actually need to know how to code to do this. Like I said, I'm going to show you how to do it without coding, but for this example, let's just say this is our strategy. So this is how the code looks for that exact strategy. If we want to buy when the 14 crosses over the 28, this is where it says buy. So right here, we can actually edit what it looks like on the chart. And then here, once it crosses under, then we could sell, 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 sell. So this is how that looks on the chart. This is all automated stuff. There's no manual clicking any buttons. You'll see on the chart, it does exactly what we programmed it to do, and it follows the rules. When the 14-day moving average crosses over the 28, it'll buy. And then when the 14 crosses under the 28, like over here, it will sell. So now that you have a strategy, the second step is back testing it. So if I just click down here on strategy tester, it'll bring up the back tested results, which this case, this equity curve doesn't look horrible, but it's definitely not great. So the general rule of thumb here when back testing algo strategies is if this strategy lost money in the past, chances are it's going to lose money in the future. So you can see in the past year, this thing has made $37. And if we go a little deeper into the performance summary, you could see the gross profit was $137,387 and the gross loss was $137,425. In this case, the thing lost a total of $37 when doing 800 trades. So this thing is pretty much break even after a year, which is not something that makes money. So this bot is something that I would not use in my live account. Now, like I said, you don't need a code to build a bot. Your first option here is using a no-code platform. Like this one right here is called Build Alpha. This is the one that I build all my bots on. It costs a little bit of money, but there's also free ones out there like TradeStation Easy Language. You could build bots right inside of TradeStation. But this one is my favorite because I could just pick some of these different parameters and different rules, or I could have it randomized. If I click random 500, it's going to pick 500 of these random signals and then spit out some code. So if I click continuous simulation, it'll spit out all of these strategies. And now what I could do is pause this because it's just going to keep going through different simulations. I could just pick the one that made the most money by just going at the top right here. You see this one, net P&L 132,000, drawdown 17,000. And then I could click the individual equity curve. If I like the way it looks, I can decide whether I want to go export this code and go into TradeStation and start testing this on a simulated market. And how I would do that is just click right here, generate code, and it'll spit out the whole code. And this is what I would put into my TradeStation, and then it'll be all automated and I can track it on my simulated account or even my live account with a small amount of money as you're testing. That's a no-code platform right here. It's called Build Alpha. Your second option would be to hire a coder, which could be a little expensive depending on your budget. Coders usually use like Python or or different APIs for customization. Or your third option is using a platform like mine that already give you access to optimized bots that are ready to go, plug and play. But personally, I use Build Alpha to build my bots and TradeStation because it lets me automate my futures trading without coding. If you start algo trading today, here's what's going to happen. You're going to think the bots always win. Well, I got news for you. They don't, but they definitely do remove emotions. Second thing, you're going to over optimize your backtest and try and make your bot make so much money. Like a bot that made $10 million in backtest will probably fail in real time. And then the third thing, you're not going to manage your risk. So every bot needs drawdown protection and stop loss rules in place. Because if you look at my live P&L, this is my account. I started with 50,000 and it's just running with algos only. You can see it's not only green. You make some money and then it pulls back a little bit. You make some money and then it pulls back. You make some money and pulls back. As long as your equity curve is just going up long term, that's cool. That means you created a consistent system. So it's very important not only to focus on the wins, but how is your bot going to react to drawdowns and when the market goes against your strategy. This is why it's important to optimize every single bot you have and put some certain drawdown and stop loss rules in place. A lot of people think trading bots are just magic money printers, but the real magic is in risk management. Hedge funds don't aim for 100% win rates. They aim for consistency. So now you know what algo trading is and how to start. Next, we're going to go deeper, actually walk you through a bot building process step by step. If you want to see that, hit the like button and drop a comment if you've ever tried automated trading before. And I'll see you in the next video where I'll show you exactly how to build a bot from scratch.